Hey there, welcome back. I've got something really exciting to share with you today, and this could be the key to making some serious money this week and in the month of February. I respect your time, so let's get right into it. Today, I'll be sharing some valuable research on how you can grow your wealth. I'm talking about real opportunities in the stock market right now, including some exciting companies that are poised for growth. Let's dive into some of my top picks that I'm actively watching, starting with Sofi Opportunity. Let's kick things off with Sofi, which is trading just under $14 per share at the moment. Sofi recently pulled back from over $18, and now we're seeing a great entry point just under the 50-day moving average. When a stock pulls back like this, it can be an incredible opportunity to buy. Here's why I'm so bullish on Sofi right now. The company has shown impressive growth, especially in the third quarter, with over 30% year-over-year sales growth. And the best part? Their non-lending segment is actually driving more of that growth, which means they're diversifying their revenue streams. I'm a long-term believer in Sofi, so I'm taking a dollar cost averaging DCA approach. Right now, I'm selling $14 puts because I see Sofi as a fantastic value at this price. Look at this chart. You can see how Sofi has bounced multiple times around the $14 level. That's not a coincidence. Investors are clearly seeing a lot of potential at this price, and every time it hits $14, there's a strong demand for the stock. So if you're looking for a millionaire maker, Sofi might just be that stock. I see a solid opportunity here, and I'm telling you to hold and maybe even look at selling puts for the March expiration. The more Sofi scales, the more products they can sell, which means more revenue. Sofi's growth and CEO. Let's talk about the growth story here. Sofi is now profitable for 4 consecutive quarters, which is a huge milestone for any company. In Q3, they reported $61 million in net income, which is a massive turnaround from the $267 million loss they had last year. This kind of financial turnaround shows the company's strength and resilience. And don't sleep on the CEO, Anthony Noto. He has over 80,000 followers on X, formerly Twitter, which is something I always look at when I'm evaluating a company. A CEO with a strong online presence adds a lot of social velocity, which can have a big impact on a company's stock performance. This is one of those things that investors tend to overlook, market cap and potential. But I can tell you, it matters. Now let's zoom out a bit. Sofi has a market cap of $16 billion, and honestly, I think it could easily double to $32 billion over the next few years. It's a medium cap company compared to the giant banks, and it's growing fast. I love how Sofi is disrupting the traditional banking model by combining tech and finance in such a seamless digital-first way. When you compare Sofi to legacy companies like Goldman Sachs, you can see just how far ahead Sofi is when it comes to innovation. These traditional banks are stuck in the past, while Sofi is moving full speed ahead. This gives Sofi a huge competitive edge. Looking ahead, I see Sofi reaching $20 a share within the next year, $30 in 2 years, and possibly $50 or more in 3 years. Think about companies like Palantir, which went from under $20 to over $100 per share. That could very well be Sofi's future. If you're ready to ride the wave of innovation, Sofi is a great pick right now. SPY and the general market. Alright, now let's talk about the broader market. I'm buying the SPY on any weakness I see. We just got through a big market correction, but here's the thing. These dips create opportunities. With the AI race heating up and the market still digesting a lot of bad news, we're actually seeing more opportunities for investors right now. I've been following this closely, and I think we're in for a big year. In fact, Tom Lee from Fundstrat has called for the S&P 500 to hit 7,000 by mid-2025. We're only a month into the year, and I'm already seeing a lot of momentum. My personal returns from January were fantastic. I made over $240,000 in a month. That's a 7% return, and a lot of it came from stocks like Palantir. Even if AI only delivers a 10% return this year instead of my expected 20%, I still think the market is set to rise significantly. AI and the bull market. One thing I've noticed is that the market is in an AI arms race, and that's huge for investors. AI is going to fuel productivity growth, and companies that are leading in AI, like Nvidia and Palantir, are going to see massive benefits. I'm extremely bullish on the broader market because of AI, and I believe we're in the early stages of a major growth period. So here's the deal. If you're buying quality companies, you're going to do well in the long run. Look at the market's reaction to the recent news. Things may seem tough right now, but they'll bounce back faster than you think. The market has a way of digesting bad news quickly and moving on to the next big opportunity. Palantir's rise. Speaking of opportunities, let's talk about Palantir. This stock has been on an absolute tear, and I'm loving every minute of it. From $82 per share to over $110, it's been a wild ride. I'm up $247,000 on my Palantir position, and I'm feeling incredibly bullish on this stock. The reason I love Palantir is because over half of its revenue comes from government contracts. The government is spending a ton of taxpayer money right now, and Palantir is in the sweet spot to take advantage of that. Not only that, but Palantir is making huge strides in AI and data, which gives them a massive edge in the world of cyber warfare and data analytics. If you're not invested in Palantir, you're missing out on a huge opportunity. I expect this stock to hit $150 per share in the near future. Tesla's bounce. Next up is Tesla. I know the stock has been a bit volatile recently, dipping below $400 per share. But here's the thing, I have zero concern about Tesla. Musk has some major moves coming in the next few years, and Tesla is still undervalued at this price. We know Tesla is pushing the boundaries of AI and autonomous driving. By 2026, Tesla is expected to roll out full self-driving cars on a global scale, and that's just one of the many reasons why I'm bullish on this stock. If you can grab Tesla, Nvidia's dominance. Now let's talk about Nvidia. I'm extremely bullish on Nvidia right now. If you're looking to invest in AI, Nvidia is your best bet. This company is the undisputed leader in AI chips, and they're about to see massive growth as tech companies pour billions of dollars into AI infrastructure. If you're not already in Nvidia, now is the time to buy. The stock may have dipped recently, but it's still undervalued at current levels. And I think this is a no-brainer purchase for anyone looking to get into AI. AMDA, strong play in AI. Finally, we can't forget about AMD. While I'm more bullish on Nvidia, I still think AMD is a solid pick for anyone looking for exposure to AI chips. AMD is innovating rapidly, and its CPU and GPU chips are starting to make inroads into Nvidia's market share. I'm not going all in on AMD, but I did invest $75,000 in the stock because I think it offers a great risk-reward ratio. If AMD gains just a fraction of Nvidia's dominance, the upside could be huge. Conclusion. So there you have it. SoFi, SPY, Palantir, Tesla, Nvidia, and AMD. These are the stocks I'm watching, and I believe each of them has tremendous potential in the next few years. If you're looking to build long-term wealth, I highly recommend you consider these opportunities. I'm not a financial advisor, but these are the stocks I'm personally invested in, and I'm excited to see where they go in 2025 and beyond. Remember, the key to success in the market is staying the course. Don't get distracted by short-term dips. Stick with quality companies, dollar cost average, and hold tight. We're in for an incredible ride ahead. Thanks for watching, and I'll be back with more updates soon. Make sure you subscribe and let me know your thoughts in the comments. Happy investing.